Alright guys, hello to you all. Today is Sunday, the 26th of November 2017. In this weekend review video, we're going to be looking at some stocks, some of the big name stocks, and I'm also going to give you guys a heads up for those of you with me on tradingwithzach.com. I'm going to be looking at some stocks that we're hoping to enter sometime this week, so make sure you're signed up on the site. So let's get straight to it. First up, we're looking at the IBB. This is the ETF that tracks the biotechnology index. By the way, those of you new to tradingwithzach.com, let me just tell you what my standard chart settings are. I always have the daily chart on the left-hand side and the weekly on the right-hand side. I use 3 moving averages on both time frames, the 200, the 50, and the 20. They are both simple moving averages. Okay, right, so looking at the IBB, we've got this beautiful pivot low here at 302, which coincides with the rising 50 moving average on the weekly on the right hand side, and last week we got a bottoming tail. We're now making sort of a bullish, the start of what could be bullish consolidation. I may be looking to jump on board this. This thing should start to make its way up to the 325 area, coinciding with a 50 moving average on the daily. This ETF is in an uptrend on all time frames. It could be that we might top out here at the 320 level, so it will depend how we get up here. But again, make sure you're with me on tradingwithzach.com to get notified when I enter. Okay, let's look at the next stock. Now, in last week's trade video, which you would have seen, I said this is a support level at the gap fill. We've got a bottoming tail here. However, I didn't actually enter this short. I did say keep a lookout for the trade alert. I've changed my mind. I'm now actually starting to become bearish on the stock. Looking at this gap fill here, we should have got a good bounce. However, if you zoom in, you can see we've actually now closed below that bottoming tail there on the daily, and we're going sideways in a bearish manner, and we are consolidating underneath that. Now, give it a few more days, and if this thing still continues under the 108.02 level, this thing will be going down, and it'll be a good opportunity to jump on board on the short side. Again, make sure you're with me on tradingwithzach.com to get notified when I enter. Okay, looking at IBM, in last week's review video, I pointed this one out. Oops. I pointed this one out. We got the bottoming tail last week, and look how the stock is moving beautifully to the upside. We're already above the 50 MA, which is rising. This thing should now, in the coming days and weeks, make its way up to the 156 level. So everything's looking good on this chart. Now, as for what happens after we make our way up to the 156 level, it's arguable what's going to happen. We really have to see how this stock will react to the 200 moving average. Because it's moving downwards on the daily and it's still downwards on the weekly. But initially we should get a good move higher. Okay, DRYS. This is probably going to be the trade of, I'm not sure, the trade of 2017 or the trade, or possibly even, let's hope, the trade of the decade. Look at this. DRYS, it was the equivalent of 1.7 million. Only this time last year or year and a half ago rather. It keeps having a reverse split, is in a continual downtrend. Now, something significant has happened. Again, we're looking at the daily chart on the left hand side. Something significant has happened to this stock. However, it's not on the daily chart that catches my attention. Look at the right hand side, the weekly chart. We have now, for the first time since, let's go back. For the first time in a year, we have broken above the 20 moving average. Arguably, you could say the break above the 20 moving average this time last year when Trump won and we got that massive rally where it jumped, I think, 20 times or so, went up 2,000%. That was just a one-off where the stock just had massive short covering and came all the way back down again. That was not sustainable because the 20 moving average was moving downwards. However, what catches my attention here is that we are now consolidating in a bullish manner or above the weekly 20 moving average. Now, I don't quite think it's ready just yet because this 20 moving average needs a few more weeks. Once this 20 moving average on the weekly turns upwards, this stock will be able to launch and it will be able to blast off. What I also like is the fact that we are now consolidating gently on the daily chart on the left hand side. We are above, beautifully consolidating above the 50 moving average, the yellow line, which is now also rising. So I'm getting consistent signals on the daily and the weekly. And remember, weekly charts are very, very important because we need to know what the institutions are looking at. It's the hedge funds, it's the banks, it's the pension funds. Those are the institutions that move the markets. It's not you or me behind our laptop at home or trading on our phone that moves markets. We need to know what the institutions are looking at, and we need to know when they're going to step in and support a stock and when they're going to launch a stock. So that's why we need the weekly chart. So this looks like it could be a really, really good setup. And when this thing gets going, I mean, historically, whenever this thing's popped, it's popped with a vengeance. So again, what I'm very excited about, we've cleared beautifully above the 20 moving average. There is a chance it will move either this week or next. However, I'd much rather this 20 moving average start to turn upwards. So it might need a few more weeks. It may even really start to pop as we move towards the end of the year in the Xmas rally, Santa Claus rally. So that is something to look out for. If you want to be notified when I enter this trade and you want to follow me on this trade, and this should be a really, really spectacular trade, make sure you are with me on tradingwithzach.com. Make sure you're signed up. If you're new to tradingwithzach.com, we offer a free 7-day trial where you will get trade alerts for a week. However, if you want to learn the methodology, our winning methodology, and you want access to our tutorials and ongoing trade alerts throughout the year, make sure you are signed up. It's $99 a month. It's worth every single penny. You will get spectacular trade alerts. What's even more exciting is that we trade options. Now, DRYs is not optionable, so we'll have to trade the stock directly. But this thing could go up, 2, 3, 4, 5, maybe even 10 times, if not more, like it did this time last year. However, for most of the trading we do, we're trading options, so we're targeting much, much higher returns, which means you can trade profitably and make it worthwhile even if you have a smaller trading account. So I really like DRYs. This probably is going to be one of the best trades, hopefully of this year, if not for a long, long time. Okay, moving on. Oh, let me give you an example. SGY. Let me give you an example. Let me come back. You can see this stock absolutely got beaten up. However, it's not able to rise. It's not able to stage a permanent turnaround until that 20 moving average has started to move higher. And also look here. So that's what DRYs can do. Once the 20 moving average turns higher and starts to incline, that's when the stock will be set free. Now here on SGY, we're now moving above the 50 moving average. Again, we're looking at the weekly chart on the right hand side. This thing should also launch. So this is something that I've just thrown in there as well. Okay, looking at SDRL, we've got this nice consolidation above the daily 50 and 20 moving averages. However, look at this on the right hand side. This is the same thing what I was saying in last week's review video. If you're on StockTwits, you can go to my profile and check out that video. Look at this. We've got a 20 moving average which is leveling out, about to turn higher, and we've got this beautiful bullish consolidation above the moving averages. This stock should do well. Incidentally, this is an oil stock. Let's go to the USO. I'm going to jump straight ahead to this. The USO's in an uptrend. Now, some of you might say, those of you out there that are less experienced might say, oh look, it's gone too far, too fast, maybe it's going to come back in. That might be the case. However, this is sustainable. Look at this, the right hand side. What do we see? The weekly chart. We got the 20 moving average moving upwards, and shortly it's about in due time it will be crossing the 50 moving average, which has also turned upwards. More importantly, look at this, we're reaching these tops here. Let me tell you why the climb in oil is now going to be sustainable. Let's look at the monthly chart. I'm looking at the right hand side, the monthly chart. Not only are we now above the monthly 20 moving average, but the monthly 20 moving average has now turned higher. This is a sustainable move in oil. I'm not going to jump on it just yet because we're into these pivot highs, and this thing could quite easily pull back towards the $10.50 or $11 area. But as soon as we get a pullback that's consistent with a bullish formations on the daily as well. I'll be jumping on board. Again, make sure you're with me on tradingwithzach.com to get notified. I will handhold you through the trade. Okay, what else are we looking at? Netflix. Okay, this is a big name. Beautiful bullish consolidation on the weekly chart. There's nothing wrong with this. We've held a 50 MA and bounced off it. This thing should be moving higher. One thing to be aware of. Let me go to the S&P 500. Again, we're also in an uptrend. There's nothing wrong with this. Of course, we're just moving higher and higher. It's a slow grind to the upside. However, something I want you guys to be aware of. Normally, we get the Santa rally, the end of year rally. For that to happen, I wouldn't be surprised if we get a pullback of some sort, and then around the middle of December, around the 15th, give or take, that's when we start making that or undertaking that Santa rally upwards. So just be aware there just could be a pullback in the market to shake off some of the weaker hands, and then we'll get that bigger move to the upside. So when we're looking at things like Netflix, it's something to be aware of, especially if you are trading options, that you are aware this thing may not go straight up, despite the fact we've got a beautiful formation here. Maybe we need another couple of weeks for the weekly 20 moving average to move a bit higher, and quite possibly if the market does pull back, we come back down to the 185 area. That will be a good buy point. Okay, what's next? Tesla. Now, those of you with me on tradingwithzach.com, you would have seen we nailed the low. Go to our YouTube channel, go onto YouTube and enter in the search box tradingwithzach.com. You would see we nailed the low on Tesla. There's a video on Facebook, there's a video on YouTube explaining all the factors why Tesla bottomed, and we've been proven to be right. Everyone jumped on us, especially on stock twits, and said we're absolutely mad. The company's not making money. It's running out of cash reserves. It may be running out of cash reserves, but that's not what determines how stocks move. That's not what determines when and where the institutions will enter and support a stock. Go and see that video on YouTube. I also put it out on Stock Twits on November the 3rd, so go and watch that. And this is the backbone of all the trading we do here on tradingwithzach.com. We read charts and we turn off the news. So from our low that we pinned on the 3rd of November, the stock jumped 8%. It's just pulled back now off of the release of the semi. But looking on the weekly chart on the right hand side, again, we want to know when and where the institutions are going to support a stock. Look at this. We've got a rising 50 moving average and we've cleared above it, and now we're going sideways in a bullish manner. We've even got a sort of quasi bottoming tail. There's nothing wrong with this, and there's no reason why this thing can't get up to around the 340 level. Now, those of you that are long-term bearish on Tesla, you may well be right, but at the moment Tesla is setting up for higher prices. When we get to around the 340 level, around this vicinity here, maybe a bit higher, we have to see what the price does, and the 50 moving average will tell us what will happen. So we will be looking longer term for lower prices. However, it's way too early to tell what's going to happen. Let's get up to the 340 level first, and then we'll reassess. But at the moment, Tesla looks good for higher prices. Okay, Twitter, again, very similar outlook to Netflix, as we said. Again, it's in an uptrend. That's all well and good. However, we look a bit overbought on the weekly chart, but overbought markets and overbought stocks can still continue higher and defy gravity. So I would be very nervous to short something like this, because again, the big names can go on and on. However, just be aware, if we do get a pullback to around, let's say, the $20 level, give or take, that would be when you would want to jump on. Again, you also want the weekly moving averages to catch up with price. But again, there's nothing wrong here. Technically, it could go higher, but I wouldn't buy it at this level. I need a pullback. Okay, USO we've already spoken about in depth. Again, longer term, this thing's going higher, because let me just mention again that monthly moving average. The last time we were above the monthly 20 MA was back here towards the end of 2014. So that's great news for oil. Okay, where are we? Facebook. Again, a very similar outlook. Everything's in an uptrend. I would much rather buy it on a pullback, but again, these stocks can defy gravity, but there's nothing technically wrong here. Apple, same story again. I needn't repeat myself. We want a pullback and then we can buy, although it could continue high. GDX, in last week's video, I said I was bearish on GDX, on the gold miners. The reason being we are consolidating underneath the 20 and 50 moving averages. And look at this. We made bearish consolidation. We got a sort of topping tail on Friday. We knocked into the 50 moving average, which is now moving downwards. This thing should be heading lower. Again, if you want to get notified, you want to get an alert, I will handhold you through this trade. I will be buying options on this for downside in GDX, perhaps sometime this week. Make sure you're with me on tradingwithzach.com, and I'll be looking for 100% gain or more using options. Okay, SPY, we've already talked about that. Okay, and that brings us to the end of this trade analysis video. For those of you who are not familiar with tradingwithzach.com, let me give you a brief tour of the site. Here's the front home page. So we don't guess when we take trades, we read charts, we turn off the news. If you come to the site, you'll get a lot about my background. I've got a long description or my story, really, how I got into trading and how I picked myself up and stuck with it and became the successful trader that I am today. There's a lot of free information on the site as well. I give away a lot of stuff showing you how options work, discussing the best chart settings to use so that you can see when and where the financial institutions are going to move a stock, whether it's up or down. You've got access to the Seeking Alpha blog and the Stock Twits feed as well, and of course the YouTube channel. Now for members get trade alerts using options, and we do swing trading, so our trades are open for multiple days or weeks, so it's not day trading. If you are a member on tradingwithzach.com, you do not need to be glued to your screen all day and night. You can have a day job. This is something that you'll be doing on the side. You'll be learning how markets work and how to increase your investment portfolio. In our tutorial videos section, let me give you a quick show around. So our first video is about setting up your charts and understanding what you're seeing on the screen. It caters to all levels of investors, whether you're experienced or whether you're just starting out in trading. That is a very, very useful video that you should see. Moving on, then we talk about options. There's so many guides out there in the public domain on options. Some of it's very, very confusing. When I first started learning about options, I was so confused. Here is a quick 20-minute video that tells you all you need to know and no more. Then we talk about the different trade setups, what I call the flush and blast off play. Again, it's showing you where the institutions, this video will show you where the institutions will trick the public into thinking a stock is going one way, and really they're going to force it the other way. So they use their buying power to cheat the smaller investor, to trigger their stops, and then they'll take a stock back up the other way. That is a must watch, that video. Okay, then we look at the bid-ask spread, and there's so many other things. One important tutorial that you must see is tutorial 7. Let me show that to you. This is perhaps the most powerful of all the tutorial videos we've got in this section. Tutorial 7, make sure you watch it. This is about shorting. This shows you where the institutions will take a stock lower for powerful moves to the downside, and because we're buying options, we can get really, really much bigger profits than if we'd shorted the stock directly. So make sure you're with me on tradingwithzach.com. I want to thank you guys for watching this video. If you guys have any questions, don't hesitate. Find me an email, zach@tradingwithzach.com. If you're watching this on YouTube, please feel free to comment in the box underneath. Otherwise, I look forward to seeing you guys on tradingwithzach.com really soon.